Just a few weeks ago, everybody was talking about MON, the newly launched layer 1 blockchain that's executing Ethereum code extremely quickly. But since launch, the price has come down quite a bit. The question is this potentially a buying opportunity? Let's have a look at the data most people are not considering. Surprisingly enough, there is still a lot of attention on MON. This is the most viewed cryptocurrencies on CoinGecko. And in the last week, MON was the worst performer among all of those cryptocurrencies. Minus 33%, a loss that's much bigger compared to Bitcoin during the same time period. Now the price of MON hasn't performed that well, but the capital on chain is actually still stable. There are no outflows. This is the TVL over time. It has just hit a new all-time high with 218 million. And the stablecoins on chain also stay on chain. There's no outflow here. Clearly, activity is going down though. This is the decentralized exchange trading volume on the MON chain. It peaked at 311 million and is now down to 70 million. It's hovering around that level for the last 2 weeks. Here is the chain revenue. Also, it has come down and is at a stable but low level. Interestingly enough though, even though the capital on the chain has stabilized, the activity has stabilized, the price continues to decline. This is MON relative to other altcoins. It peaked on the 26th of November, and since then the MON token has underperformed the rest of the altcoin market by 58%. Yes, the TVL on chain is at all-time highs, but the price relative to the rest of the altcoin market is close to all-time lows. Here's the number of daily active accounts. Here's the number of daily peak transactions per second, and here is the number of token transfers. Initially, a lot of activity that's now coming down. So besides the activity coming down, what else might depress the price? The answer is potentially tokenomics. We do have an expanding token supply, and every month we see roughly 3 million worth of new tokens hitting the market through validator rewards. 3 million per month into a market cap of 189 million. That's 1.6% per month. And that of course has a price impact as well, but it shouldn't have a more than 50% price impact. There is a potential opportunity here because the market cap is already very low. Once we go below 200 million in market cap, sometimes it makes sense to just buy in the hope of a short squeeze. So if enough people are currently betting on falling prices of MON, maybe the market makers will buy back the token. And there are first signs that this is exactly what's currently happening. Have a look at the Solana chain. Here we've got 8,600 holders. And over here, also activity is going down. The number of first-time traders is declining day by day, and it's currently only at 160 wallets. The number of token transactions is also going down. Here's the trading volume on chain. It's also going down. If you're enjoying this video so far and you're getting some value out of it, then feel free to give this a like. It will help the channel grow. It will help spread the word. Thank you very much. But there's an interesting development with the number of holders. On the left side, we see the number of wallets with 0.1 token. So it's close to the total number of all wallets. In the middle, we've got the number of wallets with 57,000 tokens. It's roughly $1,000 worth of the token. This continues to go down. So this is also where sell pressure is coming from. But once we go one order of magnitude up, so that's now $10,000 worth of the token, we do see that some people are picking up the pieces. Some people are buying the bottom here. Potentially the smarter money is getting in and is daring to make a contrarian bet. Have a look at the percent of supply held by the large retail investor. This is going up more and more. It used to be only at around 30%. Now it's at around 50% of total supply. Very often tokens that have a relatively constant history of underperformance do get short squeezed if enough people bet on falling prices. The trading volume on MON tends to go down on the perpetual futures, very similar to what we see on the spot market. And while the open interest is declining as well, it's not at historical lows. It's at 76 million, which is roughly a third of the entire market cap. So there are bets being made on the MON price. And my impression is that most retail investors are probably betting on falling prices. And it might be that the counter position is getting opened by the market makers. And once the market makers have enough supply, then they might buy up MON on the spot market and push all of those shorts out. Already right now, we see more trading on the perpetual futures compared to the spot market. The spot market had roughly 30 million worth of trading volume for the largest exchange. The perpetual futures market hit 55 million worth of trading volume. So I would not be surprised at all if we suddenly saw a short squeeze, not just 13%, but way larger in magnitude, that then of course afterwards could deflate again. So it could look something like this, then afterwards we come back down. We see this regularly with many other altcoins. For example here, right, have a look at the Trump token relative to Solana. It continued to underperform very consistently, and then we got a squeeze of 45%. And the underperformance continued. We got another squeeze, this time 90%. The underperformance continued, and here we are again, another short squeeze, this time 73%. And something very similar could happen for Monad. So I believe it's quite dangerous to now bet on falling prices. Is it the best token to hold long term, given that it's also an inflating token, given that the usage is not growing? Probably not. But is it the best bet to now just hope that the price will continue to crash? I believe that's quite dangerous as well. Again, because the market cap is already below 200 million. If the price was to suddenly double from here, then all the shorts would get liquidated, and then it might make sense to bet on falling prices again. That's at least my game plan. I'm currently not touching the asset, but I might consider betting on falling prices if we do see a surprise rally. When everything else is coming down and Monad suddenly rallies, that might be the time to enter a short. That might be the time to bet on falling prices. But right now, again, I believe it's too dangerous. Less than 200 million in market cap can get manipulated very easily with not much capital. It doesn't need capital of 200 million to move the market cap by 200 million, especially when a lot of the supply isn't that liquid, when it's just in an ecosystem development fund and when it's allocated towards teams and investors, etc. Now let's look back. In 2025, the average Bitcoin investor pretty much got nothing. There were no gains, there were no losses, went slightly down by 8% roughly. The average altcoin investor, however, suffered much more. This is the performance of smaller altcoins in the last year. Many of them are down 70, 80, or even more than 90%. And that's really why sentiment is so bearish. It's most people owning many different altcoins, having a diversified portfolio of alts, and then underperforming massively, while other risk-on investments are actually doing fine. The Nasdaq 100, for example, appreciated this year. The problem really is that those smaller altcoins get hyped by influencers. YouTubers say that you should buy this small altcoin or that small altcoin. You're taking on much more risk than you should. And then in the end, you end up losing 50, 60, 70, maybe even 80% in the span of just a single year. If you used leverage, you probably already lost everything. This is the others market cap. And there was the flash crash on October 10th, where the average altcoin fell by 48%. So if you had leverage above 2x on any altcoin, you lost it all. And this was all just due to mispricing, right? We went back up quite quickly again. Those purchases, of course, had not been made by the average Joe. This was algorithmic trading. And now those algos are selling off their allocation over time as well. Many projects went from the billions of dollars, Bonk for example, to just a few hundred millions. 4 billion down to 600 million. Or here, SPX 6900 from 2 billion down to 400 million. Or over here, Fartcoin also above 2 billion. Now just slightly above 200 million, a drop of 90%. Or here, Dog with Hat, 4 billion down to 300 million, a drop of more than 90%. Now, interestingly enough, you are still watching crypto content, so hopefully you haven't lost everything. But if you're just in Bitcoin and you have lost maybe 8% this year, that's not ideal either. It makes sense to change approaches, to not try to find the next 10 or 100x altcoin, because this is not the market to try to make those gains. Currently, the attention on crypto is very low low, and it does need a lot of attention for those smaller altcoins to rally. This is not the time to buy those very risky bets. It's better just to focus on long-term compounding. Now, how many of those other YouTubers that you're following in crypto is actually willing to share their own data, their own performance data over time since maybe starting to trade? I actually do not know a single one, but feel free to comment down below. I am willing to share my data though. This is my trading portfolio over time. This is a monthly chart, and this is going up for two reasons. It's going up because I regularly dollar cost average into that portfolio, but it's also going up because it outperforms just buying and holding Bitcoin. This year I did make money. So have a look at this. This is the monthly performance versus Bitcoin over the same time period. Every dot here represents how much I did better or worse compared to Bitcoin in that specific month. And what we see here as a dotted line, that's the 12-month moving average. Now, the overall average of all of those dots, that's 1.9%. So over the last 50 months, I have on average outperformed Bitcoin by 1.9% per month. Now, I don't just show this in order to brag. Of course, I do want to show my credentials here, but on the other hand, I also want to show how much volatility there is. There are some months where we underperform Bitcoin. There are other months where we outperform. The long-term average is what matters, and that's realistic. 1.9% per month is definitely achievable. The 10x or the 100x might be achievable with one position during a bull market with a specific lucky bet, but it's definitely not realistic long-term for an entire portfolio. And I don't just want to share my own performance. I also then started in July of 2025 a 5-month copy trading beta test. So every annual member of premium of this channel was able to deposit into that pool, and whatever trade I made was automatically reflected in the portfolio of the members. Now, this was a very actively managed project, and so here the outperformance versus Bitcoin is more than just 1.9% per month. But that's what diversification gives us, right? It gives us a bit more stability, but also muted returns. But here's where I think I'm different to all of those other influencers that only talk, but that don't really show their data, that don't really prove themselves in the market. If all of those influencers are so successful and they make those 10x returns so regularly, why don't they just open a similar kind of copy trading pool and then take a cut of the gains? The reason why they don't do this is because they don't outperform. They simply just make content on YouTube and then get some advertising money by YouTube or potentially even by individual crypto projects, right? Very often when those small altcoins get promoted, it's just because the influencer got a kickback from the project. By the way, I never took any money from any crypto project ever. I only have the premium membership of this channel. I have the affiliate link for Ledger. I've got the affiliate link for TradingView, so those are two tools, and I've got an affiliate link for Hyperliquid. That's a platform that I use myself where you can reduce your trading fees. But I've never taken any money from any project in order to promote that token. And so if you want to turn things around, if you want to start getting your money back again, you probably have to also follow a different approach. Now, I'm not a magician. I cannot see the future. This is not how I make this outperformance. I simply just write the market structure. And the market structure for many altcoins is very disadvantageous for most retail investors. Very often the supply of an altcoin tends to grow over time. This here is the example of WorldCoin. But very often the demand doesn't grow as quickly as the supply. And that leads to underperformance. Every single week we've got roughly 700 million worth of unlocks. Bitcoin, on the other hand, has only 284 million worth of unlocks. So the altcoin market has unlocks that are roughly double the size of Bitcoin. Yet a Bitcoin is more than 9 times larger in market cap compared to the altcoins. So we are looking at roughly 20 times the selling pressure relative to the market cap for the average altcoin relative to Bitcoin. This is why things like WorldCoin over time go down versus Bitcoin. That's why we see charts like this. This is WorldCoin relative to BTC. And so my approach is not trying to find the outlier here. When everything goes down that much because the early investors and the insiders sell, then I want to get part of that money as well. I am flipping this chart around and then it looks like this. This is Bitcoin relative to WorldCoin. There's a way to get exactly that performance. Had you opened that position at the beginning of the year and you just held it until the end of the year, you would have made more than 300% return. Now this is of course a positive example and there is a lot of volatility in here as well and there are ways to get stopped out. That's why I'm showing the actual realistic returns that are achievable, that I've achieved for the premium copy trading vault. And that's why I also share my alpha over Bitcoin for the entire crypto portfolio. 1.9% per month is realistic, but the right position can go up quite a bit. More than 300%. So there's really no need to try to find the next 10x meme coin. I have made several tutorials on this approach, how to set up the trades, how to do proper risk management, etc. And of course, I'm sharing my own trades as well. For example, over here, this is November 24th, where I entered a short on Pudgy Penguins. So I want to bet on relative valuations. We want to bet on one altcoin doing worse compared to another altcoin that might have high correlation to that alt. But more of the theory, of course, is explained in the videos. And so that's truly how I believe things can be turned around. It's not following the same kind of recipe, the recipe of disaster, but it's instead following the market structure. The odds are stacked against the regular retail investor that just buys an altcoin. Don't be like the average Joe. You want to have an edge in the market. So here's the premium membership. It's currently $125 per month. If you want to be part of the next copy trading pool and you simply just want to deposit your money and set and forget and I then trade for you, then you might consider the annual membership. Those 17% were achieved over 5 months. If we annualize this, that's more than 40% after fees. So the break-even point is somewhere at around $3,000. That's for annual if, of course, the prior returns will persist. That's a big if. Nobody knows if we can keep the performance. But again, I do think that we've got the odds on our side. If it's the first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.